Time is 5:48, and it's time to talk about your money here on Good Morning Quad Cities. First, let's take a look at how the stock market is doing. Finally, investors had reason to celebrate last week. The S&P 500 gained almost 2%, the Nasdaq added 4.6%, and the Dow Jones Industrial Average rose 0.7%. It was the first time this year the Nasdaq reported a gain for 5 consecutive days. Joining us now is our financial expert, Mark Grabacheski from the Quad Cities Investment Group. And Mark, despite last week's rally in the stock market, the first 6 months of the year was pretty brutal for investors. Tell us why.
It was extremely brutal, wasn't it?
Yes.
Well, this graph we should have coming up here shortly, shows the performance of the 3 major stock market indexes during the first 6 months of the year. And we can just see here, looking at this, just how expansive that sell-off actually was. From January 1st through June 30th, the S&P 500 lost 20.6%. Its worst first half performance, Linda, since 1970. The Nasdaq lost 29.5%. Its worst first half performance in the entire history of the Nasdaq stock index. The Dow Jones Industrial Average lost 15.3%. Its worst first half performance going all the way back to 1962. And to get to your question, the cause of this sell-off is, from growing concern that the economy is going to head into a recession. To help, overcome this very high rate of inflation we're seeing, the Federal Reserve is aggressively raising interest rates. And that very potent combination of high inflation and rising interest rates has Wall Street forecasting that it's more a matter of when and not if the economy goes into a recession.
So putting you on the spot, when can we expect this possible recession?
There is tremendous, excuse me, it's like I almost swallowed a fly or something.
We can tell you don't want to talk about this.
There is tremendous debate over it. The picture's a little bit cloudy. Look, some people argue we're already in a recession. Others argue, maybe the second half of 2023, maybe the initial phases of 2024. But the general consensus, though, Linda, is that if we do go into a recession, it'll most likely happen within the next 12 months.
Okay, on Friday, the Department of Labor released the monthly employment report for June. What did this latest report tell us about the state of the U.S. labor market?
The labor market, it's far from perfect, but it is one of those parts of the economy that, continues to do fairly well. Just looking at some of the numbers here, we continue to see fairly solid job growth. And for the 4th month in a row, the national unemployment rate held firm at 3.6%. But one of the biggest challenges for the labor market, Linda, has been getting people to return to the labor force from this pandemic. If you remember back in March and April of 2020, the labor market lost 22 million workers as entire sections of the economy, were literally shut down. But here we are over, 2 years later, and the economy has yet to recapture 524,000 of those lost jobs. And very quickly, let's look at this labor participation rate, Linda, which shows the percentage of Americans that are either working or actively looking for work. The labor participation rate is still near a 45-year low. And this number here means that there are millions of Americans that, were once working, are no longer working, and more importantly, are no longer looking for work. And the resulting labor shortage, especially in manufacturing, in shipping, in transportation, limits the availability of goods, which helps keep those consumer prices high.
Of course, a lot of people want to work from home. Unlike us, we're happy to be here this morning. Now, with all the concern over a recession, how do you think this will impact the labor market?
Whether the economy goes into a recession or not, the economy is expected to weaken over the next 12 months. And it's only natural that at some point, Linda, that weakness in the economy over the next 12 months starts to manifest itself in the labor market.
Okay, thanks so much, as always, for your insight.
Great to see you again.
Great
Enjoy the rest of your day.
Thank you.